Have you heard that the excellent MarketMaster EA now has an additional strategy available? It's called the MarketMaster Duo, and like the original MarketMaster, it looks like a great EA with a verified track record. So let's check it out. But before I continue, it's actually interesting that most of you watching our videos haven't actually subscribed, and the videos must just pop up, but you missed to subscribe. So please double check if you subscribed, as it will help us a lot to keep bringing you content. Let's first take a quick look at the vendor's website for an overview, and then we will look at our backtest results. So both of the MarketMasters are $299 for a single MT5 license, and if we have a look here, we've got a free demo, and it tells us a bit about it. So it executes trades on two pairs, the New Zealand CAD and Aussie CAD, and it does know that those systems are correlated, so it doesn't do trades in the same direction on both symbols. So it's just avoiding being overexposed, essentially. We've got 30-day money-back guarantee. As I said, it's a lifetime license for a single MetaTrader that you can transfer as many times as you want. And down here, down the bottom, I've just noticed it actually says you can purchase an additional license for half the price when required. So sounds like an interesting EA. Lets us add some diversity to our portfolio. Now, MarketMaster is one of our most trusted vendors, and for good reason. Let's take a look at the track record to see one of the major reasons why. As we see here, we've got our track record. Okay, now that's pretty typical, but if we come and see, first of all, it looks very good. So we're just seeing steady growth there, 7.3% monthly. It's shown here. We don't know exactly what lot size they're trading, but it's been trading on $1,000 since August 10. As I said, it's pretty new EA, but it's got over 6 months data there. But the reason I'm saying it's so trusted is it actually has the live update, as the original MarketMaster does. Now, you'll see so many vendors that often don't have this, and that means there's the potential to manipulate the track record. Doesn't always mean they're not a good EA, but it's less trustworthy for sure. And in this case, we've got a vendor just absolutely making sure that there's no way they can manipulate that. It's made a 30% drawdown. Clearly, I think it's trading a bit more than the minimum there, but the vendor's certainly got some confidence in it. And 7.3%, you know, I guess when you wrote it, I tend to back off the risk to aim for a little bit more conservative to try and limit the drawdown. But anyway, it seems to be doing really well. By the way, if you like this content, then it's much appreciated if you can hit the like button for the YouTube algorithm, because it helps more traders to find our videos. So let's take a look and see our backtest results, which we'll do over a longer period of time. So I've actually done this backtest already, and I'm just going to share the reports. So I've saved them here. The reason I just want to show you that is I also saved the graphic. So first of all, we'll look at this for the Aussie CAD. We can see a nice steady line there, but of course it doesn't show the equity. Unfortunately, that doesn't save, but I've saved it manually so we can have a look. So we can see very typical from these type of EAs is clearly the market's ranging and doing well, and then when it trends, we've got a reasonable drawdown and it recovers and keeps going, and again it's clearly trended, keep going for a long steady period. So you have to accept that you've got to set your risk to survive these, but that's very typical. The New Zealand is very, very similar. Again, we've got this steady growth, and in terms of it looks a little bit less aggressive with the moves that have caused it to go into equity drawdowns, but it's a steady grower. You've just got to make sure you're aware to set your risk right, not to have, you know, overly big drawdowns. And so I've actually summarized this in this spreadsheet. A couple of things to point out here, actually. You can backtest this with both pairs on the single tester. It's written in such a way that it's able to backtest them both, because you can just trade the single EA and turn on both pairs on one chart. So you can see we've got 511 trades. It's showing a monthly profit of about 1% if averaged over the long term, with a pretty good safety factor. I'm seeing 288 max drawdown with that, and I like to have a bit of a buffer away from 500 because we're trading on a $1,000 account. So conservatively, with very safe risk, that can make about 1%. I've looked at each system individually, so I've backtested them individually and then combined them manually. I've combined their equity charts. I'm using AI actually, and so we get more trades. So we can see that effect. The sum of the trades is 695 versus 511. So it is being allowed to trade both pairs in the same direction. We actually made more money. The safety factors increased. The drawdowns actually lowered a tiny amount. So therefore, for the same kind of drawdown risk, we actually get an extra little bit of, in this case, 1.3%, which is very good. I would actually trade them together. I would trade them on separate charts rather than individually. I get why the developer's done that. Just what my numbers are showing me, and I'd be happy to do that personally. So it looks like the right size for a $1,000 account is trading the lowest lot size on both pairs, 0.001. So whether you're trading one or both or separately like I have in a slightly different way than just the defaults with them both on the one chart, 0.001 0.01 per thousand is certainly the right risk. So we have this running on a demo account, which we just put up recently, and we always wait until we get good demo results before trading any EA. However, I'm very confident it will show good results, and we'll decide on the lot size now, so when it's ready to go live, I'm ready. However, this one looks great for iFunds, as I have a lot of trust in this vendor and expect it to perform very well over the long term. So let's take a look at what size I would trade on a 10K iFunds account when I'm sure it passed its demo validation phase. Here's the iFunds website. It allows us to do instant funding up to 500K. So we can see that we're only allowed a max drawdown of 10%, and we're going to take 50% of the profits when we open this account. And there's a few programs here. I'm just going to look at the ambitious, which is a 10K account, which costs us $700. And let's assume we're going to trade on that and see how we go. So let's go have a look at the spreadsheet. I've already done the maths there, and I'll just walk through it a bit. So taking this example here, taking this strategy, I've copied this down the row. I've changed the amount I'm trading on to $1,000, and let's change that back so you can see. Okay, so that's the exact same line, and I'm going 10%, and we're actually trading on $10,000 of capital. But we can see that we've got a pretty big safety factor because we're actually allowed $1,000 of drawdown here. So I've doubled the lot size of everything to go, well, we'd actually make double the profit, we'd have double the drawdown, and so these are the corresponding numbers. At first glance, you kind of go, well, now I'm only getting 0.3% a month. So let's break that down and show the kind of magic here, the kind of benefits. So we're making 0.03% a month on the 10,000 of capital, but who's tracking that? It's not what capital we're trading on, it's how much we've invested to get that capital that's our actual return. So let's actually do that maths. For the live account, we put in $1,000 of capital, we make 1.3%, which is basically, I've done that here, 1,000 times 1.3% is $12.50 a month, and we take 100% of that, that's all ours. In this case, for the iFunds, we put in $10,000 of capital, and we make our 0.03%, right? And iFunds takes half, because that's how it works, it's a profit split. We make the same $12.50. We're basically making the same amount of money, but let's also remember, we've actually only put in $700, not $1,000. So our return is 1.3% on $1,000 if we use live capital, but if we use iFunds, I've done the maths here, as you can see, I've taken that $12.50 and I've divided it by 700, which is what we've actually invested. Our return monthly on the money we've invested, 700, is actually 1.8%. That's a whole 0.5% more, or nearly a third extra in profit. So there is a big benefit to putting your system on iFunds. It gives you some extra leverage. You lock your capital in there, so as long as you're happy to do that and you trust the system, it can get you extra profits, and it's a great way to do it. So I'm going to do that in this case instead of trading a $1,000 live account. So there we go. A great looking hands-off new expert advisor that should make steady profits over the long term from a very trusted vendor. Also be sure to check out this video where I review the MarketMaster EA on USD CAD. Take care and trade safe now.